Welcome to the Rural Research Symposium session on In Focus Manufactured Housing. There's a great need for this session. When I was a kid growing up in the 1970s, we were shipping much more manufactured housing than we are now. From 1977 to 1993, we shipped about 240,000 units of manufactured housing a year. In 2023, that number was about 90,000 amidst a much larger population. In this session, we're going to explore some of the barriers to the production and use of manufactured housing. We're very happy to have Lesli Gooch, who's going to be talking about solving the housing crisis by removing regulatory barriers to manufactured housing. And also Rachel Siegel, who's going to talk about a survey of MH residents and in terms of what some of the barriers are that they on the financing side. So with that, let me turn it over to Lesli to begin.
Thanks so much, Laurie. It's an honor to be here today. I'm Lesli Gooch. I'm the CEO of the Manufactured Housing Institute, and I want to commend the Freddie Mac team for bringing together this symposium. It's so important that we focus on symposiums like this so we can actually see research and facilitate a policy conversation that's driven by facts and data as opposed to anecdotal cases and assumptions. So I just want to commend the Freddie Mac team today, and we're excited about research being done in the area of manufactured housing, because what you'll see in my slides is that we really believe that manufactured housing can be a contributor to addressing the affordable housing supply shortage that our nation is facing. So I first want to talk about the research that MHI is taking on right now with the U.S. Department of Housing and Urban Development. We were actually awarded a research grant by HUD to study the regulatory barriers to manufactured housing. And essentially what we're trying to do is to establish and examine that current landscape that's out there and analyzing barriers to the placement of manufactured housing and reforms that are needed to make sure that our homes can be placed in those localities where people are seeking quality, attainable homeownership. We will be assessing the impact of the lack of ability to place our houses in these areas on underserved populations. And this includes in the rural areas of the country. We're going to be creating a policy tool that would be an index to really look at the zoning barriers and understand what's going on out there. So before we get started, I do think it's important for the audience to really understand what we're talking about when we say manufactured housing. And so really what I want to emphasize here is that manufactured housing is the only form of single-family housing that's constructed to a federal building code. You might hear about factory-built housing. You might hear about mobile homes or panelized housing. That's not what I'm here to talk with you about today. We're very excited about the 50-year partnership that our industry has had with the U.S. Department of Housing and Urban Development, because what that's created is a federal building code where you have the regulatory efficiencies in the factory paired with the efficiencies of the factory built process to be able to produce quality, attainable homeownership for more people in the country. We've got our inspectors right. The HUD inspectors are right there in the factory. So we're overcoming a lot of the timeliness challenges and the regulatory barriers that you might hear about with builders who bring the materials to the field and build a house. So today, there are a number of opportunities in terms of the range of houses that are built to the federal building code. And there are also a range of opportunities for people about how that housing is placed. The homes can be placed on private land, and they could also be placed in a manufactured housing community. And so we're really excited about the opportunity in both of those areas. When you talk about manufactured housing communities, I'm not talking about subdivisions or neighborhoods. That also is a very important element for us. And, you know, in the rural housing perspective, that's on private land. But there are land home opportunities closer in the metropolitan areas. And so we do see that subdivisions with manufactured housing are being developed today. But something that's unique when it comes to manufactured housing is the land lease community model. And for land lease communities, what's really exciting about that is this is somewhere where someone can purchase a home in a beautiful community and they are leasing the land. So you have someone else that is maintaining the community, that's taking care of all of the important amenities, and there's active lifestyle communities that go along with your home being there. But really the benefit in land lease communities is that you're able to own your home at a lower price point than you would if you had to purchase the land and the home. And so oftentimes the cost of the land payment would be close to, or of the down payment would be equal to how much someone is actually paying to purchase to live in a community. So instead of allocating those funds to purchase the land, they can actually use those toward the home or towards savings, investment, or other things. And so we're excited about the opportunities that land lease communities offer to residents. They can be a part of that community atmosphere. There's a lot of social events and activities. It reduces isolation for seniors. We have a number of senior communities, and there's a lot of other advantages to that land lease community lifestyle. It's a very popular lifestyle. Most of the communities in the country have low vacancy rates. Right now, what we see are about 30% of our new homes going into land lease communities. We call it the hybrid ownership model, and it's a very impactful and important model for people. For both on placing your home on private land or in a community, what we're seeing in our research and MHI's research is that 71% of people are extremely or very satisfied with their homes. And they are because they're noting that affordability, but it's also that home ownership, that sense of independence that really matters to people today. So I wanted to talk about how the homes are placed. You heard me mention before the HUD code, the Federal Building Code. I do want to be clear that manufactured homes of today are not mobile homes. Mobile homes stopped being built in 1976 when we established this Federal Building Code. But it is important to note that today you still have these houses that were built before 1976. There's about a quarter of the homes in the United States today that are of the factory built homes that are still mobile homes. So we feel like that's something interesting to point out. And so that sometimes when people are talking about manufactured housing, the challenge that you have is they're conflating manufactured housing with mobile homes. And we think that's really something that needs to be clarified because that stock of homes that are built to the Federal Building Code, today's manufactured home, they are very different than the mobile homes of the past. So speaking of, when you talk about the building code, the exciting thing here is there's a range of houses that we can build to the HUD code. And so what this slide is showing you is all the different kinds of homes. You see a subdivision behind me. These are our cross-mod homes. The GSEs are financing these homes at the same rates that they finance all homes, on-site or off-site. We're excited about that. We believe these are indistinguishable from others. You don't know exactly whether it's a site built or a manufactured when you drive into the neighborhood. I tend to argue that when you go through our house and you see how it's built with factory precision, you are going to be able to know because of the impressive finishes and impressive quality. But we also have a number of other options. You'll see in the top center, there's a more modern look. That's our single section cross mod home that we're excited about. Top right, you've got a duplex. That's two sections that have come together, but that's a duplex. HUD has recently allowed for that in their updates to the building code. Bottom left, that's our cross-mod home. Center bottom picture, that's a traditional multi-section manufactured home. And then bottom right, as of September 16th, 2024, HUD has actually allowed for a single section duplex. And so that bottom right picture is a duplex for two families, but it's in the one section of the home instead of having it be multi-section like the house above. So we're really excited about the options that we are offering, brand new with today's design features, with all of the things that consumers are looking for today, a range of options for them. But just as we offer a range of options in terms of the housing type, in terms of where the houses are placed, there's also options when it comes to how the homes are actually financed. And what we have is you have the traditional mortgage approach where someone is taking a loan on the home and the land and they're encumbering both together. But there are many scenarios where someone only wants to take a loan for the house, for the structure, and not encumber it with the land. And that's where personal property loans come in. And over 70% of the loans for manufactured housing today are personal property loans. This also is important when it comes to the land lease community model, where someone is leasing the land, but they own the house. And so a few things about personal property loans that are important. Loan opportunities exist for personal property loans. At MHI, we are trying to expand those opportunities to the federal mortgage programs as well. And you will see that there have been updates to the Federal Housing Administration's Title I program, which is with respect to the personal property loans. So we're excited about, if the federal government is going to be involved with financing homeownership in America, we think it's really important that they support manufactured housing as well. And we think the personal property loan, leaning in on that, is a part of that. It's important to note that almost all of the federal mortgage consumer protections that apply to real property loans also apply to personal property loans. That's really important. Some might suggest that if you receive a personal property loan, that somehow consumers are at risk. And we do not see in the data, there's no, that's an assumption that's being made. But what we like is that there's a range of options for financing for people, and they do have those consumer protections when it comes to lending. Other benefits to consumers about personal property loans, it's that oftentimes lenders aren't willing to do those small loan sizes. And when you're talking about the home and not the land, those are smaller loan sizes. And so you do have those benefits where the lenders are willing to make those loans for the personal property. The other thing is they're able to do that for individuals with lower credit scores. And so we're really extending and expanding homeownership opportunities because you've got those smaller loan sizes, and then people are able to qualify for these. The other thing is that they can close more quickly than a real property loan. And so you see people who are renters who are, finishing up their lease at an apartment, and they're looking for their next option. And with the efficiencies of factory building, they can find the house that they like, find the design and the floor plan that they want, and it's a faster process to homeownership than other forms of building and other forms of financing. And like I already said, oftentimes people don't want to take the loan on both the land. It might be family land, but they're not wanting to encumber the house with the land. And so we're pleased that we have these flexible options for manufactured housing. I already spoke about communities and the benefits of communities. This slide really just shows some more of the benefits that we really see our land lease community model as addressing a critical gap for cost-effective housing, rather than someone sharing walls, living in an apartment. This gives the opportunity for outdoor open space. They're able to own their space, which means they can make choices about their home. just like any homeowner can in terms of, the paint colors and the animals and what flowers to plant and that kind of thing. So we're really excited about our land lease community model because this is a really important form of attainable homeownership. In addition to covering the use of the land, the site rents include things like infrastructure, utilities, taxes, insurance, amenities, and other services. What we're really excited about when you look at the data, housing costs in America have skyrocketed in recent years. But what we find is that overall rent increases in land lease communities have remained lower or on par for rent in other types of housing. Our consumer research actually shows that the consumers find that their home that they own in a land lease community is the best alternative when it comes to cost and affordability and compared to the other alternatives in that area where they want to live. And that while, yes, rents might have gone up, they haven't gone up as much and the cost isn't as much as other forms of housing. So we're excited about that. We're also excited that our owners, this is a model where it's a partnership with for-profit owners. And so with that partnership comes, the desire to make sure that people are, that it's a sustainable form of ownership. And so what we see is that communities offer options for rental assistance and payment plans and other things. We saw that during the pandemic, and we were really excited about the partnership that came about where you had the support for residents when they needed it. This is the largest form of unsubsidized affordable housing in the country. And so we're really excited that we have these solutions that don't involve government subsidy. So in terms of the landscape and what we're trying to do, most renters that we see, they want to become homeowners, but what they know is that the cost is too high. They're not able to become homeowners. And what we're contributing is the opportunity, because the cost per square foot is significantly less. We have that option where even though the homebuyer income, when you look at it, it's less than half of the income for somebody buying a site-built home, but they're achieving home ownership in a house that costs significantly less as well. So what we're doing is we're expanding and extending the American dream to more people, which we're very excited about. Just a couple of weeks ago, the FHFA announced that they will continue now. They've started looking at, they do the home price index for site-built homes. They're going to actually start doing that for manufactured homes as well. And so they did their first release. And what it shows is that manufactured homes appreciate in line with site-built homes. And so, sometimes out there's stigma around our houses. They say, oh, well, that house, it's going to depreciate on day one like a car. Well, that's not actually what's happening in America right now. People are attaining home ownership in brand new homes. It's not a fixer-upper. The price point is what is accessible for people, but the house is brand new, which means today's designs, energy efficient features, the things that today's entry-level home buyer are looking for. And that house is going to appreciate for them as well. So we're very excited about that. The other thing, though, that we know, and this is where our zoning research comes in, is that manufactured homes right now are underutilized. You'll see over time that we've always hit around the 9% of new single-family home starts. And so as the Manufactured Housing Institute, the question is why? Where's the barrier? And so in partnership with HUD, when we're looking at those barriers, we realize that zoning, the old stigma about mobile homes, has really negatively impacted our ability to provide this housing for more people in this country. And so that's where we've had this partnership, and we are going to move forward. This research, just so you know, is not complete, but today we're here to share some preliminary findings from that research. And so we wanted to pull together the literature around those zoning barriers that hinder manufactured housing, and really look at where we are in terms of increasing housing supply and benefiting consumers, especially in those underserved communities and rural areas. And what we want to end up with is a zoning index. So after we examine the literature, we want to identify those barriers and then come up with an index so that localities can identify reforms and really move toward allowing for more manufactured housing to be placed for those people looking for quality, brand new, attainable homes. So some of the barriers that are common here that we see is that you have the local housing definition in zoning, and in all of the ordinances and such. And that might conflict with the federal definition. Again, we're the only form of housing that's built to a federal building code. So there's actually a federal definition of manufactured housing. And there are times that local definition actually conflicts. The other thing that is typical is you've got construction requirements for housing at the local level that are contradictory to our federal building code. And so we need to really work on overcoming some of that, because when you're building on site, it's very different than building in a factory and transporting to the site. That's why we have a federal building code. But those standards need to actually work so that they can be accepted in those local areas. Sometimes local design requirements will exclude manufactured housing. If it's something about the roof pitch or materials that are to be used, again, it's a federal building code. All of this has been agreed to and adopted there, but you may have some restrictions at the local level where they just are not understanding that federal building code. Other things that restrict manufactured housing are with respect to lot size or the requirements for valuation. Remember, people are looking at the tax base when they're bringing in new housing. So that sometimes becomes a barrier. And then sometimes it's just maximum age requirements and that kind of thing. Owner occupancy, the owner must own the land. That harms us when we're looking at our hybrid ownership model with land lease communities. And then the treatment of communities generally. We've got a number of older, you might think of them as trailer parks or mobile home parks. We're transforming those into beautiful manufactured housing communities today. And sometimes that means replacing the old mobile home with a brand new manufactured home. But there might be barriers based on the way that localities are treating these communities where we're not able to do that. So those are some of the barriers that we really think are important to overcome. I've got another slide when it talks about the barriers, but this shows the survey in terms of the rankings. When you see like how prevalent so far, again, this is a work in progress, but it's interesting to see how these things are lining up in terms of the rankings of their challenges. So we also want to make sure that we're talking about the impact. What's the positive impact when we figure this out on consumers? This is all about consumers at the end of the day. And so as a part of our research, we actually don't want to just say, here's what's going on in the landscape. We want to say, if these pieces of the landscape change, here's the positive benefit that it will have. We're not making assumptions on this. We want it to be based in data and research. And so that's a part of our research as well. Everyone knows that homeownership rates have declined. When you look at ages 35 and up, you see that there's a real challenge here in terms of homeownership rates. The other thing you have is a challenge where people just think they're going to be renters for life. And if you look at the total monthly housing costs for people in manufactured homes versus site-built homes, you see that all-in cost is a lot lower. The other thing that you see for renters is you see that there's a real opportunity here for people to be owners. And this is all based on American Housing Survey. But in the United States, the average monthly cost a renter pays per month is $1,646. We can get them into a brand new manufactured home for significantly less than that. And that's what this is about. And that's the positive impact we have. We are going to be able to create homeowners and really deliver that American dream to more people. When you talk about the average income to afford a manufactured home, it looks very different than data that you've seen in the past when it comes to the average income that's required for someone to purchase a brand new single family site built home. Significantly, we're looking at $52,800 for someone to have, that's their income level, someone to be able to attain homeownership through a manufactured home. That's huge. That's really exciting to us. And we really think that this research overcoming these zoning barriers is going to lead to a positive benefit for more people where they do not have to settle for a home that they don't own, or they don't have to settle for a fixer-upper. They can get the brand new home with all the features that today's consumers are seeking. It's important to look at this across demographics as well. When you look at the average income for people, for Black renters, what you see is that's only about, it's just over $57,000 in 2023. And Hispanic renters, you see that at about $66,000. These are underserved populations that can afford the monthly housing costs of a brand new manufactured home. And so what we're doing is we're extending and expanding equity and ownership across these demographics, which we just think is so exciting. So in closing, we are excited about the fact that we are bringing attainable homeownership to more and more people. And what we want to do is overcome some of those government barriers that have prevented us from reaching those populations. And we believe that this research is what's going to help us get there, because when we show what those barriers are, we have more likelihood at that local level to change those barriers. And so we're looking at the impacts of that. In the end, we want to create policy recommendations and a toolkit so that we can address those barriers at the state and local level. And from that, we can bring the American dream of homeownership to more people with quality and attainable housing through the factory built process. So thank you very much to Freddie Mac for allowing me to share some of this today. And I look forward to the remainder of this symposium. Thank you.
Okay, thank you, Leslie. Hi, my name is Rachel Siegel. I'm a senior officer at the Pew Charitable Trust at the Housing Policy Initiative. The findings I'm going to talk through today are from a forthcoming paper, and I want to thank my co-author, Seva Rodnensky, for his help. Today, I'm going to present preliminary research focused on findings from Pew's survey of manufactured home residents. And this will focus specifically on the comparison of non-metropolitan and metropolitan manufactured homeowners, looking at their land ownership or tenure, and talk about how these differences shape their opportunities and challenges in this space. So it's important to study manufactured housing, and Leslie's actually given us great framework to understand why. The federal HUD code helps manufactured housing be especially affordable and to fill these crucial housing supply shortages. But it's also really important that we look at how folks are financing these homes and their access to safe and affordable financing. My agenda here will cover 4 areas, specifically an overview of Pew's manufactured home survey, a look at what the survey shows about how home and land are owned and how this differs between non-metro and metro areas, and then how that land ownership impacts access to credit. Then lastly, we're going to look at some things that policymakers can do to improve access to safe and affordable financing. So we decided to create and field this survey for 3 reasons. Manufactured housing can be a little different than other site-built homes, and that creates some gaps in data. So one thing that's especially challenging is that most data sources for housing don't show home and land ownership or rental separately, so it's difficult to understand. In addition, data about whether a manufactured home is titled as real estate, like other site-built homes, or as personal property, which is a little bit more like a car, is an important distinction. And then lastly, there's very little information out there about the prevalence of something called contract financing, such as rent to own, contract for deed. And so this survey helps reveal the incidence, especially among manufactured homeowners. Here's some details about the survey itself. It was fielded from November to December 2022, conducted by Ipsos using their knowledge panel probability-based web panel. The survey was nationally representative, included 1,252 qualified respondents who took the survey either in English or in Spanish. All of the respondents needed to be at least 18 years of age, and we had a couple of screening questions. One was to ensure that everyone who took the survey made financial decisions in their household, but also when we asked what type of home they live in, they needed to choose either a mobile or manufactured home, specifically as their primary residence. Here are a few key takeaways from this research. Most manufactured home residents own their home, both in non-metropolitan and in metropolitan areas. In addition, most manufactured homeowners also own their land, and this is especially true in non-metropolitan areas. Real estate titling is key to accessing mortgage financing, yet even among those who own both their home and land, many own the home as personal property. And then lastly, prevalence of contract financing among manufactured home borrowers, specifically folks who are currently using some form of financing, was quite high, about 1 in 5. And this is especially high in metropolitan areas. So let's take a look at the prevalence of land ownership. Among manufactured home residents, about 8 in 10 own their home. And for this presentation, we're going to focus on the large majority of homeowners. So looking at this graph, most homeowners own their land, but some do rent their land, and this has a large impact on financing. So on the left-hand side, you can see the non-metropolitan manufactured homeowners. 82% in the green reported that they own both their home and their land. And in comparison, on the right-hand side, just 55% of manufactured homeowners who are in metropolitan areas said that they own their home and their land. So one key component here is the titling, and mortgages require real estate titling. So this is a very important component. It's key to remember here that site-built homes are titled as real estate by default. And as a result, this is super common. In fact, manufactured homes are automatically titled as personal property in every state except New Hampshire. But I do want to mention that there are a few states that do allow land renters to title their home as real estate, but these often require long land leases, and it's certainly not automatic. Okay, so the green here in this graph, this is all manufactured homeowners. And despite the fact that we have high land ownership, just half of non-metropolitan homeowners own the home as real estate. So to orient you a little bit, the green is still home and landowners. 82% of non-metropolitan homeowners say that they own both home and land on the bottom here with the red box, but just 53% have the home titled as real estate. And then in comparison, when we look at metropolitan manufactured homeowners, 55% own home and land, and just 37% have the home titled as real estate. So the ramification of lack of titling as real estate means that a mortgage isn't always possible. Now, a mortgage for a manufactured home is like one for a site-built home. It's the gold standard of financing with the strongest consumer protections, longest terms, which are about 30 years usually, and often lowest interest rates. But for folks who have their home titled as personal property, a home only, also known as a chattel or personal property loan, can often be the next best option. There are fewer consumer protections compared with mortgages, shorter terms, more like 20 to 23 years, and higher interest rates, but there are still federal and state consumer protections here. Lastly, though, and what's unique about our survey is that we're able to see the prevalence of contract financing like lease purchase and contract for deed. And the thing to understand here is that if things go wrong, there are little to no consumer protections. Sometimes there are state protections on specific kinds of contracts, but little is really understood on whether or not these would cover a manufactured home borrower if their home is titled as personal property. So more work needs to be done there, but it's important to understand the range of options. So we can dig in here a little bit and take a look at the prevalence of use of the various kinds of financing. Among all manufactured home borrowers, this is folks who currently have some type of financing, 1 in 5 report that they have some form of contract financing. But when we look at the graph on the right, we can see that this does vary quite a bit based on non-metropolitan versus metropolitan manufactured home borrowers. 56% in non-metropolitan report having a mortgage, 28% say they have a home-only loan, and 15% say they have contract financing. On the right, metropolitan manufactured homeowners or home borrowers, 38% say they have a mortgage, 38% also say they have a home-only loan. So those are two different 38%. And a full 24% said they have some form of contract financing. So these differences are statistically significant, but what's even more striking is that among site-built borrowers, just 5% say they have some form of contract financing. And that's from a previous survey we did looking at other types of financing. So really strong differences. And for site-built, that 95% actually are all mortgages. There are no home-only loans in that group.
There are a number of policy approaches to improve access to safe and affordable loans for manufactured home borrowers. At a federal level, programs could be expanded to help more manufactured home borrowers access mortgage or home-only loans. The Federal Housing Administration, or FHA, already plays an important role in access to mortgages for manufactured homes. They also have a Title I program for home-only loans specifically. However, none have been made using this in the last few years. Some updates have been made, but more are likely needed to fully reinvigorate this important program. In addition, the government-sponsored enterprises, or GSEs, have already been working to expand mortgage access and could serve a similar role for home-only loans. USDA makes some manufactured home mortgages as well and has proposed a rule to expand access. At the state level, titling policies for manufactured housing could be re-examined to help manufactured homeowners title their homes as real estate like any other home. And state and federal policymakers can act to strengthen consumer protections for borrowers who are using contract financing. These policies and protections for homeowners using contract financing should apply for manufactured homeowners regardless of their titling.
So I want to leave you with a few key takeaways. Most manufactured homeowners also own their land. This is especially true in non-metropolitan areas. But real estate titling is necessary for access to mortgage financing. Non-metropolitan homeowners are more likely to report real estate titling on their home, with 53% of them doing so, than their metropolitan counterparts that only have 37% saying they have real estate titling. However, both could be expanded. And 1 in 5 manufactured home borrowers report they're using some form of contract financing, which really have few consumer protections. And so improving these consumer protections is key. Thank you so much. And now we'll turn it back over to Laurie.
Well, thank you very much, both Lesli and Rachel, for super interesting presentations. I'm going to offer some comments on each of yours, and then some policy recommendations. So I'd like to start by just sort of repeating some of the information that Lesli presented initially on how important this sector is as a source of affordable supply. This just shows you annual shipments of manufactured homes from 1959 to 2023. Again, 240,000 units from 1977 when the HUD code was passed to about 1993, 90,000 units last year in the face of a growing population. It's about 9% of total single-family production, as Lesli pointed out. And again, manufactured housing is the most affordable type of housing. An average of $87 per square foot versus $166 per square foot for site-built homes. Median household income is less than half for manufactured housing owners versus owners of site-built homes. So again, why is production so limited? And, I think Lesli's presentation showed how important zoning barriers were. In their survey, they found that the lack of education among public officials was perhaps number one, followed very closely by zoning use barriers. That is, communities just do not allow manufactured housing. The top three reasons for this were, first, the local definition for manufactured housing is inconsistent with the federal definition. The second is that design requirements exclude MH. And the third most common reason is that local building code requirements conflict with the HUD code. So the three largest zoning impediments, two of them are based on definitions for MH or local zone or local building code requirements that conflict with the HUD code. Breaking down those regulatory barriers is critical, and I look forward to the rest of Lesli's survey with more complete results. But it's not only, when we talk about affordability, it's not only the price of the manufactured home, it's the affordability over time that counts. And this is where Rachel's paper was so interesting. So, basically, you need to make improvements in three areas from the borrower's point of view. The first is land leases. The second is improving MH financing. And third is improving protections for chattel or personal property financing. With that, let me actually look at a couple of numbers from Rachel and her co-author's paper. So this paper sheds light on manufactured housing by home and land tenure and by location, that is metropolitan or non-metropolitan. It shows that U.S. manufactured home buyers are much less likely to use mortgages compared with site-built home buyers. Close to 100% of those that own their home and lease the land have their MH titled as personal property, which, as Rachel pointed out, makes them ineligible for mortgages. A relatively high proportion of the loans are cash purchases. A relatively high proportion of these are just cash purchases, 52%. Out of those that own the home and rent the land and finance the transaction, 57% use home-only loans and 43% use some sort of alternative financing, some of which is very predatory. Even more surprising, 30% of those who own both the home and the land were titled as personal property, which makes them ineligible for mortgages. Out of the own group, 78% used financing. Out of those who financed, 58% used mortgages, 28% used home-only loans, and 14% used other financing. That is, mortgages were far more common in the own group, but a significant proportion of the own group did use home-only loans. And we actually verified that in a slide that I'll show you in a second. Mortgages have the strongest consumer protections, so the use of other alternatives leaves buyers more at risk of eviction, foreclosure, and financial instability. Challenges with access to mortgage financing and robust protections are especially acute for manufactured housing owners in metropolitan areas because, as Rachel pointed out, they're far more likely to rent their land. And the survey shows that most MH owners who lease the land either don't have a lease or don't know if they do. And I found this fascinating because this is the first survey that I know of that actually looked at the lease arrangements. This provides little stability in terms of land rents, terms, or even the ability to remain on the lot. Personal property loans have certain benefits versus mortgages. In particular, personal property lenders are usually willing to finance smaller loan sizes. Personal property lenders are willing to finance borrowers with lower credit scores, and we saw that in the HMDA data. Personal property loans may close much faster than real property loans. Owners may knowingly not wish to encumber their land with a lien, and there may also be a difference in taxation between personal property taxation and real property taxation. In most states, manufactured homes are automatically titled as personal property. If the borrower does not own the land, the manufactured home generally cannot be titled as real property. If the borrower does own the land and wants a mortgage, the borrower must change the titling to real property, which obviously represents a hassle factor. And some consumers may not knowingly choose a personal property loan. They may potentially follow the dealer's recommendation to take the quickest route to closing. Personal property loans have certain disadvantages versus mortgages as well. Personal property manufactured homeowners who do not own the underlying land are vulnerable to underlying rent increases or terminations, as states rarely provide landlord-tenant protections to these residents. Because the home can be moved only at great expense or possible damage, these borrowers must often abandon their home and any equity if the lease increases become simply unaffordable. The pricing of personal property manufactured homes may be significantly higher than the pricing of real property manufactured homes, and we saw that very, very clearly in the HMDA data. The consumer protections on personal property loans are more muted than on mortgages, and the personal property borrower may not be aware of these disadvantages because the lender is not obligated to disclose most of them. We have suggestions in 3 areas for improvement. The first is the lack of land leases, the second is on the financing side, and the third is on the consumer protection side. As I mentioned earlier, the manufactured homeowner without a lease or with a short-term lease has no protection against large increases in rent on the land, and it's very costly to move the manufactured home, on the order of $10,000 to $15,000. Pew made a great contribution in their survey in terms of looking at the terms on these leases. The Pew data show that only 13% of those who own the MH and lease the land have a lease of 3 years or more. 18% have less than a 3-year lease. The balance either don't know or don't have a lease. HUD's Title I has a 3-year minimum lease requirement. The GSEs require pad lease protections. One of these protections is renewable leases with no limitation on the increase. We suggest that this should be re-examined. In terms of the financing, education and lending disclosures so that borrowers know the difference between chattel and real estate loans and have adequate opportunity to explore mortgage financing is very important. I love the Pew suggestion that loans for MH on owned land should be automatically titled as real estate unless the borrower chooses otherwise. FHA and Ginnie Mae have both made valuable changes to the FHA Title I program to finance home-only loans, and Rachel made this point as well. FHA has dramatically increased their loan limits and indexed them to inflation. Ginnie Mae has changed their lender net worth requirements to bring them into line with other products. There are further changes that could be made. In particular, FHA could further align their Title I program with their Title II program using similar forms and calculations for income, assets, and employment, which would allow for automated underwriting. Ginnie Mae, with the approval of SIFMA, could permit Title I loans and Title II pools subject to the de minimis requirement. More standardization in the home-only market would bring down the cost of these loans. The GSEs are great standardizers. The GSEs and FHFA should re-examine the development of a home-only product. And then finally, protections on home-only loans could be improved. We could consider the development of a clear and standard disclosure form for borrowers similar to RESPA requirements and include sufficient information for the borrower to comparison shop for home-only loans versus a mortgage if they own the land where the home will be placed. We could consider the creation of a standard recording document beyond the Uniform Commercial Code and require recording assignment of the home-only loans. This would make it easier for the properties to be bought and sold. We could consider national standards for default servicing on home-only loans that include adequate notice of default and the opportunity to cure. In this presentation, we've shown how manufactured housing is the single most affordable form of housing. Its costs are less than half of those of site-built homes, yet the amount of manufactured housing being shipped is a fraction of what it was in the 1970s with a much smaller population. The MHI paper did a great job of highlighting some of the zoning barriers. The Pew paper did a fabulous job in terms of showing some of the financing barriers. I think there are three sets of recommendations that would make this, and I've brought up three sets of recommendations that would make this manufactured housing a more popular product. In particular, better protection on land leases, improved manufactured home financing, and improved protections on home-only loans. Thank you very much for having me on this panel today. It's been a pleasure.
Hello, my name is Laurie Brown. I'm a Senior Director for the Research Group in Freddie Mac's Mission and Community Engagement Group. I lead a team of researchers focused on analytics to drive our underserved markets efforts, including manufactured housing. The objective of our Rural Research Symposium is to bring the research and diverse views together. We aim to facilitate data-driven discussions. Freddie Mac is committed to understanding the landscape and opportunities within the manufactured housing sector, just as with all underserved markets. The three individuals featured in this panel bring deep knowledge and years of experience to studying the consumer perspective in housing markets and manufactured housing. The specific views of each presenter represent their own and not necessarily those of Freddie Mac or the other presenters. Yet I am hearing a shared view that consumers and the housing market benefit from a robust and available manufactured housing market. A robust manufactured housing research agenda requires consideration for home ownership choice, such as the rent to own or rent versus ownership decision, land ownership choice, leasing versus purchasing, property options, site built versus manufactured housing, and the size of the manufactured home. Neighborhoods, location, such as rural versus metro areas, or specific communities, and the financing choice for the homeowners. Researchers of manufactured housing like Laurie, Rachel, and Lesli, and those from our recent convenings like Kevin Park, Helen Banga, Alana Falcone, and my co-author, Stu Aw, have contributed to our understanding in these areas. Yet there's more work to be done here. Areas for additional exploration where the research can go even deeper include: what are the implications of the complex interplay of selection and sorting in terms of location, property type, and loan type on the housing market equilibrium, or those outcomes that we observe in the data? What more can we learn about the impact of consumers' demographic or credit attributes and public policy on the consumer's housing experience or their loan shopping behavior and loan application outcomes? Can connections be made or dots connected? For instance, our work with the University of North Carolina several years back confirmed that consumers are thinking through some aspects of the loan product choice, like the trade-off between encumbering their land, speed of closing, and other potential benefits associated with their selected mortgage product. Yet, there is still much more to learn. The impacts of and ideas for continuing efforts related to removing barriers caused by consumer or policymaker stigma or general misunderstandings about manufactured homes can further be considered. These, along with others that the researchers may identify, can help move the conversation further along. I urge you all to consider the data deep dives, rigorous empirical analysis, and the surveys that contribute additional qualitative and quantitative data points for our analysis. With this, we have come to the end of our fall program. Now I pass it on to my Vice President, Cindy Waldron, to close out the day. Thank you.